Welcome, Ermelinda. Great to see you here. You are on time. And welcome, Yoshi, as well. Thanks, everybody, for... Hey, Joe, welcome. Thanks, everybody, for spending time here today. We're not waiting for people anymore. We're going to get started. I just want to go over a couple of things before we get started, just because if I don't do it now, I'll forget. And the first is... many of you may or may not know about the forum. The forum is at Naked Forex Now. This is where I and other naked traders and semi-naked traders post a lot of their stuff. So if you want to go and watch people trade, you can follow their journals. About the only problem with the forum is if you don't do something, it logs you out like this. And I don't know why it does that. It's kind of annoying. So you can go through here and see trades that people are taking. I post videos on here and trades, and other people do as well. It's really cool to see how other people are taking trades. So if you go to the forum, you can get a lot of information. And the great thing is it's all free. It's all on the house. So definitely spend time there. If some of these things that we talk about today are a little bit tricky and you don't really know what I'm talking about, go to the forum. That's the best place to go. So there you go. So that was the first thing I want to talk about. The second thing I want to talk about is there's a link here, and I'm going to copy it and paste it for all of you. It's right here. So I've just sent that to everyone. You should have that link. That link will get you to the webinar on Friday with Roberto. And if you don't know Roberto, he's on the forum. And his name is Forex Boy on the forum. So if you go to the forum, you can see Roberto's videos and stuff. And he has a trading room. And what he's going to do on Friday is he's going to give a trading webinar where he's going to take live trades on Friday. He's going to show you how he trades on Fridays. And apparently, I've heard from the people in the trading room, last Friday they just cleaned up. So hopefully this Friday is just as good. That's going to be at 7 a.m. New York time, which I think is noon in London. And of course, unfortunately, that's going to be about 4 a.m. in Seattle, Los Angeles, San Francisco. And then here in Australia on the East Coast, most cities, it's going to be, like in Sydney, it will be at least, 7 a.m. is going to be 11. Yeah, 11. 11 p.m. on Friday night, if you want to go to that webinar. Now, the reason why you also might want to go is because everyone who goes to that webinar will be invited to Roberto's trading room next week for free. Roberto trades twice a day. He trades from 7 a.m. to 10 a.m. in the mornings, and this is all New York time. And if you ever need to convert your times, you can go to time and date and compare, say, New York to your local city. Like if you live, for example, in Cairo, you could compare the time in Cairo to New York and see what the difference is. Now, you just type it in here. See? Cairo. There it is. So right now in Cairo, now I'm curious. It's 3:05 p.m. And so next week, if you go to the webinar, you'll get invited to Roberto's trading room next week, and you get to go 7 to 10 a.m. New York time, 7 to 10 p.m. New York time. Those are the two times that he opens it up. So it should really work for everyone. Even if you're sleeping during one of those times, during the other time, you should hopefully be able to attend. So that would be really cool, because I have been getting so many unsolicited emails from people who are in Roberto's trading room who are loving it. So it's something to think about. If you want to see him use his Friday system, you can do that. And then next week, you can also attend the trading room for free. So that's great. And that's about it. Oh, the last thing I want to talk about is, I don't know if anyone's seen this, but it's a really cool tool at Awanda, and it's called Open Position Ratios. And I was actually just talking about this the other day in the Daily Trader program. We were talking about open position ratios. This is why it's critical, and this isn't. We could probably do a whole webinar on this, but I just want to throw this out there, just because right now is one of the times when you can use it. This right here, XAG/USD, as many of you know, that's silver, right? Joe, the forum is nakedforexnow.com. Nakedforexnow.com. forexnow.com. There you go. The link is right here. I just sent it to you, Stephen, and everyone else. I just posted it. Cool. Okay. So, Roberto's forum, it's the Forex Circle. Circle.com. Okay? And here's the link. Okay. So hopefully everyone should have that. Oh, the open positions ratio. Okay, here's the link for the open positions ratio. Now, the reason why I'm talking about it is just because it's top of mind. It doesn't always happen, but this is a really cool tool you can use. And again, you know, this isn't really what I wanted to talk about today, but it's just so cool I had to. Okay, what you do is you wait, and you can check out many different currency pairs here. Like the pound yen's not on here, but if I added it, you can see. So what this tells you is very important information. I actually talked to Awanda a couple months ago. They came out to Sydney, and I had a meeting with them, and not all of the people that work at Awanda, but one. And it was really interesting because one of the things that we talked about was this idea, and she said, you know, she was talking about, because Awanda, they're a retail broker, but they also offer liquidity to some hedge funds. So they're not just a retail broker. They actually do have really tight spreads, and they will offer hedge funds some trading possibilities too, which is great. But what we talked about was this open positions thing, where when the majority of traders, and I define it as 85% plus, so actually this is pulled back. Last week this was at, I think, 84.98, 85. It snuck over the line. And so I pay attention when this gets to 85 plus, okay? Doesn't always happen. In fact, most of the time you're going to see numbers like this where, you know, 57% of the trades are short and 42% are long, like on the euro right now. Well, why would you want to pay attention to this? Because we know that most of the traders, retail traders, are losing money. So if we know that a lot of retail traders have piled up on one side or the other, we know we want to be in this minority. And in fact, you're going to have to take my word for it, but if you go back, I did make this video for the Daily Trader last week because I noticed this, and I posted it in there because I wanted people to see it. Well, silver, everyone was long silver, so it was time to short it. And if you look at the silver chart, you're going to... That's not the silver chart. That's the silver chart. If you look at the silver chart, what you're going to see here is that last week, which was around here, this is when, right around here, was the time when everybody was going long. It was over 85% around here. I think it was, no, that was the 18th, sorry. I'm talking about around Friday, Thursday, around this time here, right around here. Everyone was saying, oh, it's time to buy silver. Well, since then, how far has silver gone? Well, let's see. You know, it's gone another it's gone another $2 down since then. You know, it's just crazy. So this is hold on, not $2, not quite $2, $1 or so, $1.19 since then. And so this is a thing that you can do whenever you see the majority of traders in that open positions ratio page all piled in on one side. And again, it really has to be extreme. So that's why I draw the line at 85%. So actually at this stage I would say that it's actually pulled back, and it's not enough. I really want to see, you know, 85 plus. And if you can get it over 85, ooh, it is a great opportunity. And you can see that again, it happened there on silver, where, you know, the market was just starting to make this little bearish flag, and then everyone started piling in again, and then boom. And again, what makes the market go, this is probably getting way too far off topic tonight, but is that all of these stops get triggered, folks. So the stops below here got triggered, and that's what made this big candle go, okay? And then what happened here? The stops down here got triggered, and that's what made this spike lower. So that's what happens. That's what trends are made of. And this is one of the things that I learned from the founder of Awanda, Richard, he was at the FX Street conference, and he was talking about how a lot of people talk about, everyone's selling silver, so that's why silver's going down. No, not really. What's happening is everyone's stop losses are getting hit on silver, and that's why it keeps going down, especially retail traders. When you're talking about hedge funds and professional traders, it's a little bit different, but when you're talking about the majority of the market participants, those individuals, they're driving this trend by getting stopped out here, getting stopped out here, getting stopped out here. That's where these trends are piling on at. So, and the open positions ratio will really help you there. So I just wanted to give you that tool. Okay, so so Colin says that the IG index account also does this. Okay, cool. Thanks, Colin. So I'll just put that up there. The IG index account also shows this on their insight. Dom, they pull this data from their traders. Yeah. They pull it from their traders. So there is no central exchange, obviously, for Forex, so there is no central clearinghouse. Yeah. Rasika says the FXCM also has this for live accounts. Oh, really? I didn't know that. Yeah, I've only seen, to me, Awanda had a lot of this stuff, years ago, and I don't even look at, I didn't even know that IG or FXCM has it. But that's great. So there you go, folks. You have other opportunities too. You don't have to use Awanda's. But I would say FXCM and Awanda would be two of the larger retail brokers, so they would probably be a good barometer. I'm sure IG is pretty big too. I just don't know I don't know if they're as big as Awanda and FXCM. Ermelinda has just given us a link for Saxo Bank as well. Cool, thanks. So there you go. There's that one too. Okay. IG is the biggest in the UK. Yeah, I believe that one. Yeah. Okay, so today's webinar, moving on down the line, today's webinar is about support and resistance. Does anyone have a chart you'd like to look at? Currency pair and a time frame. Ma 10 says the Aussie Daily. Ermelinda says the Pound CAD. Oh, sorry. Ermelinda says the Euro Yen. Pound CAD says Colin. Pound CAD says Rasika. Okay, Pound CAD. Pound CAD it is. 4 hour. We're going to go Pound CAD. Bum, 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 bum. And we're going to go 4 hour. 4 hour. I'll go black and white. Okay, so what I wanted to talk about today is it just occurred to me, I've had this week 3 people asking about support and resistance. And so I thought it would be kind of good if we did, and that's what this webinar is all about, which is about how do we find those spots on the chart? What does it take? What are the rules? How do we know that this is a good support and resistance level? So that's really what this is all about. It's really good if you're new to naked trading. So this is the first thing I do. I know I'm going to trade the 4 hour chart, so I'll go to the daily. So I'm at the daily chart here, all right? And then I'm going to go ahead and go to the line chart. And this is simply all I do here. Whoops, this one should be, actually I just changed this the other day, just a couple minutes ago, at another webinar, so I made it solid. I like these dashed. I like these lines to be dashed to remind me that the market can get through there. Now, do you see what I'm doing? I'm putting these lines at places where the market found resistance and fell, and where the market found support and then traded higher. Same thing here. The market found resistance. Boom, boom, boom. 3 in a row. Another one there. Another one there. Support, support. I'm trying to find those spots where it has both support and resistance. And I'm doing this on the time frame that is higher, the higher time frame than the one I'm interested in trading. Because I'm interested in trading the 4-hour, I'm going to do this on the daily chart. And I'm just trying to capture those that have the most bend. So this is a great 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This line right here has 12 votes. So to me, this is a very critical spot. I love the fact that the market 12 times has reversed here. So that's really important to me. I love that. Now we'll find some more. There's going to be one right here. I'll make it green again though. And then there's going to be one down here. And there'll be one here. And here. And here. And then the last one, actually I'll put another one here. Okay? So look at this. We bounced right here in February. We bounced right here, or that was February last year. We bounced right here in July last year, double bottom. And guess where we bounced recently? Magic, magic. On Valentine's Day, we bounced there once again. It's amazing how the market has a memory. What is this line chart doing? It's capturing the closing prices, and it's connecting the closing prices basically. That's all it's doing. All the closing prices here are connected on the chart. Now I'm going to make sure I didn't miss any extreme highs. There's one right there. So that's going to be good enough. Now I'll move down to my 4-hour chart and I'll just make sure that I didn't miss any. And if there are any glaring omissions, I'll go ahead and write those, put those in. And it looks like perhaps you could make the case for one being right here, where we had this little wick, that bounce, that pause, that touch, that touch. So maybe I missed that one right there. But generally speaking, most of them are going to show up on the higher time frame, at least the important ones. If I don't draw one in, like for example, clearly, you could make the case that there's one somewhere in here, right? I could say, well, what about the one right here? I missed it or whatever. It touched there, there, and there, and there. Well, that's great. That's fine, and that's, completely understandable. But what I really want to do is I want to have the very best ones on there because I want to see many multiple touches. And that's what I get when I use my daily chart. If I'm using my daily chart to find 4-hour touches, I'm really going to find some nice ones because the only way it's going to hold on the daily chart is if a lot of 4-hour candles pause there. See all these 4-hour candles that paused right here? That means that the daily candle obviously paused here, and probably almost 2 candles. Let's see. This is on the 5th and the 6th. Let's see. Yeah. There's the 5th and there's the 6th. So you can see all of those 4-hour candles that were right there became this down, pause, up. So that's really what I want to see. Now, let's talk about where we're at right now on the pound CAD 4-hour chart. If the market comes up to this level right here, I might take a trade. But really, to me, the very best spots that I want to see a trade triggered, it's not really here. And it's not even really here. It would be up here, or it would be basically where we are right here, right now. So if I had a good indication that the market was ready to turn around and give me a trade, the best spots to find that would be right here and right here. And why would I say that? Why is that the case? Tony says the most touches. Theo says risk to reward. Martin says double bottom. Extreme says Rasika. Manu says more room to the left. Major turnaround area says Mike. Yeah, Manu and Mike are basically thinking the same thing. Al says extreme. You need to buy at the lowest and sell at the highest, says Colin. Current extreme says EA. Yeah. Yeah, you guys are getting it exactly. Many reverses, says Steven. More room and space, says Theo. Joe says most touches. Yeah, exactly. So the idea here is that, and this is, I actually talked about this on the Kiwi trade, no, Kiwi Singapore, the Kiwi. People were talking about taking the Kiwi trade, and basically what I said was this. I said, the problem to me with the Kiwi, there's a Kiwi big shadow right here. Everyone can see that. There was a belt back here, but there was a big shadow right here, and everyone can see that. Now, the issue with this Kiwi trade was that the first target was right here in this middle area where you had all of these kind of choppy bounces right here, and it was really sort of like, to me, this was a box of consolidation, right? And this red line here was sort of the middle of that consolidation. And so ideally, rather than having, you know, that area there as a first target and then down lower as a second target, ideally I would rather trade a trade like, well, actually the best example would be this one here, where I had a double top up here on the New Zealand Singapore, because then it has further to go. And in fact, actually that's not even, the best example is the chart we're on right here. I want to nibble at the edges because I want to see the market get overextended. Look, if I'm going to be a reversal trader, which, let's face it, most of you here are reversal traders. Not everyone, but most of you want to take reversals. Well, if you want to take reversals, and I know this just from running the numbers, like most traders, when I test them out, they're really interested in, they don't want to jump in on the trend, they want to find those turning points, which is fine. I can completely understand, and I get it. The thing though is that we have to be careful if we're looking for reversals. The best reversals are always when the market's overextended. And what does that mean? Well, by definition, the market hasn't been there recently. So right here, we had a touch and moved up, and it came back down for another touch. So this could be a place for a double bottom. Now, honestly, it doesn't look like it at all. It looks like it's actually going to fall through and keep going lower, especially if this candle prints as tiny as it is right now. It looks like it's got another 30 minutes to go, or just a little bit, 35 minutes to go before it closes. And if it closes anything like this, I certainly wouldn't bet that it's going to go up. I would bet that it's going to go break through here and go down. But that's a totally separate issue. So if I'm looking for reversals, I want to see the market get up here where it reversed here and here. And it hasn't been there in, well, many candles. Let's say the market takes this long to get up here, well, and touch here. Well, that means it hasn't been up here for 60 candles. That's a pretty good run. 60 candles away from an area, and then it comes up here, of course, and shows weakness with a bearish candle. That's a pretty good run. And that means it's probably, unless it's in a rip-roaring trend, it's probably going to respect this area and fall away. So I really want exactly what you guys are talking about, which is I want space. I want room to the left. I don't want to find, like this kangaroo tail right here, it has reversal right here. I don't want to find that candles are in the way. This kangaroo tail here, and even this one after it, the problem is they're in the middle of all this choppy price action here, and even recently right here. That's not ideal. Ideally, what I want to see is touches down here, touches down here, touches up here, away from recent price action. The further it goes away, the more likely it's going to be a major swing point, and the market's going to turn around. Like this one right here. If I look at this thing, and I pull it back, and I say, when was the last time the market was in this area? Well, this is the candle right here that's printed in a unique area of the chart. Obviously, the little end of it right here didn't. But look how far back I have to go to find the market has made it here. I have to go all the way to here. So let's see how long ago that is. Okay, so that is, and by the way, that's a bearish big shadow right here too, which is a brilliant setup, just like the New Zealand Singapore. So 244 candles since the market's been up here. That's the kind of trade I want to take, right? Now, obviously, this candle right here didn't really give us anything good, other than the fact that just gave us a long tail. But it's not really a kangaroo tail. It's not really anything that you can hang your hat on. So I probably wouldn't have been interested in a trade there, and I didn't take one there. But this is a totally different story. This pound CAD right here, look at that. Nice, big, fat, bearish big shadow, completely engulfs it, and it's fallen all the way through all these targets. So that's a great setup right there. Great one. Another one that we actually looked at during the live market at FX Street last week was this one. This is another bearish big shadow, right where we had a touch right here. So the market came up here, and again, maybe this area is around here or here. It doesn't matter. The point is, it came up here, fell, came back up, printed a bearish big shadow, and during this candle, we called it out in the webinar. We said, hey, that looks pretty good. You'll have to wait for it to get through this level. This can't be a target because we're on top of it. So this was our first target, this was our second target, and this was our third down here. After the third, it bounced, and it actually went all the way down here to where the fourth would have been. But I usually will only go 3 targets. It's hard for me to hold on for 4 targets because those are somewhat rare. And the pound Aussie did a very similar setup on the 4 hour. It wasn't quite as good, and I'll show you why. The pound Aussie, which is this one right here, it wasn't quite as good. So we had our bearish big shadow here, right? Bearish big shadow was up here. Stop loss was at 53.60, selling at 52.70, and then it was right on top of our first target. It didn't break below this level until this candle. So there's a couple of ways to play this. By moving your stop to break even as soon as the target's hit, you get hit here, and then it comes back up and stops you out of break even, and the game's over. However, if you wait for the market to close on the other side of the zone, like it did here, then you can move your stop loss to break even, and then you can wait for target 2, in which case it would have been taken out. Target 3 was all the way down here at 48.90, and that was only just hit recently, a few hours ago, in fact. So that one took some time to actually get all the way down to target 3. It wasn't as good a trade as the pound CAD because it had a higher high here, and the pound CAD had equal highs. So to me, this had a little bit more bullish action, and you saw that when it got down to this first zone. It really had a hard time breaking through, and it finally did. So that's that one. Let's go back to our line chart, our support and resistance. So now what I want to do is just talk about your questions about drawing support and resistance zones. A couple of things that I didn't mention, but I would like to mention, is that I really like the recent stuff. So, in other words, you could almost trade these charts without drawing these zones in. You could just go, where's the recent price action been? Like, for example, we'll go to the Aussie here. We'll go to the 4 hour charts, and we'll go with our black and white candles, and then we'll say, where has the Aussie recently been, and where do I want to take a trade? Well, this was today's trade, this is the one that just triggered, and it's basically off of these highs right here. It got back up, printed a nice bearish candle, and that was it. And we're off to the races. I'm going to hold this sucker all the way till down here, 102.37. And then I'm going to see if I can wait. I don't know if I can do it, but I'm going to see if I can wait until it gets down here. But this is, so I don't even have any lines on this chart, but I know where I want to take a trade. There's basically two spots I'm going to take a trade. There's a buy opportunity down here, and there's a sell opportunity up here. We just hit that sell opportunity today, and it really won't give me anything good until it comes down here and bounces really hard, like it did down here. This bounce right here is a nice big bullish big shadow, isn't it? That's a bullish big shadow. Completely engulfs the prior candle. It's the largest candle we've seen in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 17 candles. It's the largest candle we've seen in 17 candles. That is a great opportunity to buy. It went up, hit, and where did it hit? It hit off of these lows right here. That's where it hit. Came back down. Where did it bounce? It bounced off of these lows right here. These lows. Came back up. Hit these highs right here. Boom. Printed bearish candle right there, and that was the trigger. So, you know, I don't even have any lines in here, and I already know where I want to trade. I want to trade here, and I want to trade here. Now, it would be great to trade up here, right, off these highs. That would be brilliant. But I was kind of expecting that this pair would make it make a move down just based on the daily chart. But we probably don't have to get into that. So that's another thing, that we can just trade off of recent support and resistance if we want to. So long as we have space, so long as we have room between our touches. Let's go to the questions now. So we've got yeah, Theo's asking about taking quick nibbles here on these zones sort of in the middle. That's fine. Yeah, you could, if you're a scalping trader, you could certainly trade off these suckers in here, definitely. But if you would like to hold them like I do, then you know, then you'll be on the edges. Yeah. EA says, I've heard studies have been done in 4-hour charts showing it makes a big difference on what time your candles are set to. When do your candles start? Do they begin at 3 a.m. Eastern or at 8 a.m. Eastern, for example? All of my candles, my daily candle opens at 5 p.m. New York time. So the 5 p.m. New York time is my candle close. I find that to be good because the interbank period is essentially from 5 p.m. Well, right now, it's from 5 p.m. to 7 p.m. essentially. And then 7 p.m. New York time is sort of the beginning of the Asian session. Essentially, yeah. Yep. So that it sort of changes over with the time change and things like that. But so I like to use the 5 p.m. Now I know a lot of traders also use the midnight GMT, which is fine, but to me, it's important you just find one and stick with it. To me, really, the most important thing is, does it fit with your lifestyle? So if you're a 4-hour candle trader and you like 4-hour candles, and I love them, you know, it might make sense just to pick a broker that offers, or a chart, like I have this chart here, right? This FX Pro isn't my broker, this is just my chart. If I have a chart like this, it fits my lifestyle because I know that my candles are going to close at 9 a.m., right? At 1 p.m., at 5 p.m., and at 9 p.m. And then again at 1 a.m., which is, you know, in 30 minutes, 25 minutes. So I know that if you're going to miss 4-hour candles, you'll probably miss one. And for me, the one I miss is the 5 a.m. one because I'm sleeping during that time. And sometimes I miss the 9 a.m. one too. But basically, you're going to miss 1 or 2 candles. So you can sort of adjust your lifestyle based on that. You know, you say, well, I really don't want to stay up for the 1 a.m. candle, so I'll use a broker where the candle closes at midnight or something like that. You know, that's a possibility. But I don't know about the studies, EA. I'm not aware of those studies. If the trade is heading straight into a zone, would you put your order in beyond the zone or wait for a close beyond? So you're talking about a breakout, Steven? Like a breakout beyond a zone? Yeah. Yeah. Great question. So here's let me show you. Let's just see here. Let us see. Well, the best example is probably this one. This is the old Canadian dollar. Now, we had a zone drawn here, and even if we had it drawn at the extreme tails right here, I actually thought it was a little bit more reasonable to have it around here, because you capture these touches over here. You get a really near miss here, and then you get a touch here and a touch there. To me, the breakout happens once this candle prints right here. See that candle right there? That candle clearly has made it above these two highs here, so that's the breakout to me. So I like the close. Now what you will often get when you wait for this close is you'll often get the market coming back and bouncing and touching. So a great example is the Aussie dollar right now. So the Aussie dollar had this really significant level really at 103.70, and there was a bounce and another bounce and another bounce and another touch, even like a kangaroo tail here. It looked like, okay, it's going to bounce again, and then boom, that right there, this candle right here, to me, that's the most important candle here. And then I say, okay, is it going to retouch? Yep, sure did. Came back up here after this bullish big shadow, retouched here, and then fell. Now, this was Friday, so it already moved on Friday, and I was kind of upset that I missed it. But again, I'm sleeping during these especially this candle here. So I missed it, and I said, well, I'll wait until Monday or Tuesday and see if it retraces. And that's exactly what we got. We got another one up here, and a great opportunity to me. This is a great opportunity for me to get back in on this and this that I've been waiting for. So the critical candle is here because that's the breakout, but you can often wait for that retouch. And it's also confirmation that this support level is going to hold, because this was a lot of support here. Boom, 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 boom. And now it's resistance, clearly resistance, especially if this candle closes like this over the next 20 minutes. That's a nice bearish close, and that line chart is going to really dive away from this zone. I'll show you what I mean. Look at that. That is a steep angle. So that's awesome. So we don't know. We've got 20 minutes to go, and they change a lot in the last 20 minutes, but that's kind of the look that I like to see. So yeah, so I like the close really. The close is great confirmation, Stephen, and then the retouch is great, because if you can get that retouch after the close, then you're golden, because you actually waited for the market to tell you that yes, what was once support is now resistance. I hope that helps. Okay, let's keep going here. Theo says, would you take off partial position, say 50% along the way? Yeah, exactly. So let me just use this trade here as an example. This is the Aussie dollar chart. I've got a first target. Now the low on this bullish big shadow down here, everyone can see why this is a bullish big shadow, right? The low on this is 102.26. So my target is 102.37. Now once the market hits 102.37, or even actually if it closes below this level here where we had a little bit of support over here, if it can close below there, I'll move my stop loss to break even, and then I'll let it ride down here. But usually I'll wait for it to hit target 1, then move my stop loss to break even. And then I'm going to let the rest of it ride until it gets down here to 101.75. I would like to hold out for 97 or down in this area, but I don't know if I'm going to be able to be that patient. So to answer your question, yeah, I do like the idea of multiple targets, and the reason why, it's not because it makes more money. I think if you test this, most people will find that the best system actually would be like a break even or big target. So if I waited, all of my money was made on the second target here, or if it broke through this level, I move my stop to break even and it hits my break even stop and I make nothing. Over time, you'll get enough of those big winners, and so that might be the most profitable system for most traders, but psychologically it's easier to take a little bit of profit early because it makes you feel better. So it's just easier to stick with it, I guess. Yeah. Dom says, if you don't mind me saying, I really learned about support and resistance through extensive backtesting. Doing it yourself first allows you to really understand what's a strong level and what isn't. Yeah, Yeah, Dom's hit it on the head. I get a lot of questions from people about support and resistance, but if you just do it, and what you'll find also is like this is a 4-hour chart, right? So I've got zones here, 90 pips apart, 100 pips apart, 100 pips apart, 199 pips apart. They're all about 100 pips apart. And on a daily chart, they're going to be all about 130, 150 pips apart. On a weekly chart, they're going to be about 300 pips apart. You know, on a 1-hour chart, maybe they're about 50 pips apart. So the time frame will give you a sort of a rule of thumb about where those support and resistance levels should be, you know? If the trade is heading... Oh, okay. Yep. We talked about that one. Camilo, I like IG, FXCM, and Awanda. Those are the ones I like. Those are my brokers. On 4-hour charts, when do your candles start? My candles start at 5 p.m. New York time. So 5 p.m. New York time, 9 p.m. New York time, 1 a.m. New York time, 5 a.m. New York time, and 9 a.m. New York time, so forth. If a zone off a 250 minute, I usually go down to the 60 minute and also down to the 15 reversal candle. So Theo, so you refine your entries, I think, right, Theo? Yeah. Arvind is saying, what indicators do you follow? Well, you're going to get the same information. Usually it's just a little bit later. So let's say we are doing some sort of, I don't know, MACD. What if we're doing a MACD and we have the 12, 35, and 15? Well, yeah, I don't really know. I'm not sure about those settings. Let's see. Let's do a stochastic. Okay, so the stochastic is probably gonna get me in, on the close of this candle with this stochastic turning over, right? So that's great. But if I use naked trading, and I'm just basically saying, look, if the market, to be honest, there was a kangaroo tail here, and I got a lot of emails about this, but this was not my favorite because it happened during the Asian session, and I wanted to wait to see if the New York session or the London session would pull it higher, and it did. And then it gave us this bearish candle. It wasn't really a clean setup. It was just, I knew that to me this was in a downtrend and this was just a retracement. So who knows? Maybe it'll come down here and it'll get hung up and then it'll bounce back up. I don't know. But I think it's got a fair shot to get down to these lows. And if we wait for the stochastic to give us an indication, we might have to wait for the close of this candle to get a really nice curve on the other side of the 70 or 80 or whatever the stochastic level is. You get the same information. The thing that you'll notice is that, like, for example, the RSI indicator, that uses closing price, all of these indicators, they can only use the same things that you see as a naked trader. They're going to use the open, the high, the low, and the close. What are we using when we're analyzing these candles? Same thing. We're using the open, the low, the high, and the close. There are very few indicators that use anything other than the open, the low, the high, and the close. That's really just about it. So, hey, Walt says, VK, my candles on Awanda 4-hour chart look different. Yeah, oh yeah. Awanda has really funky time zones. It's like set to I don't even know. It's like set to they're set to Edmonton, Alberta or something. I don't know. It's some crazy time zone. That's the only real problem with Awanda is that they're just crazy. They're absolutely crazy. That their candles are set to the weirdest times. Unfortunately. Theo doesn't want the Aussie to go down because he's going overseas. Theo says the fibs carry more weight when they also come off zones. Yeah, that's another good point. For those of you that know what he's talking about, basically, if you, let's say that you're looking at, let's say you're looking at this move here, from this high here to this low, and you're drawing your fib from this high up here to this low on the Aussie dollar. Well, guess what? The 38.2% retracement is right off of these lows here, right off this zone, and that's also the 38.2. So things like that. People will use these just to give you a little bit more edge, just a little bit more confidence, really. Robert says he likes daily candles. There are only 5 of them in a week. Yeah, that's awesome. I recommend finding a platform that your time zone makes it testing easier. Yeah, Colin, I'm with you on that one. If you find a platform that just fits your lifestyle, that's probably the best thing to do for your charting. Stanislav says, do you delete areas that you previously considered zones? And if so, what causes you to do so? Yeah, that's a great question. The thing that I do is this. If I get some funky price action and it's like the market is not really paying attention to the zone, then I might delete it. So let's say that I had a level. This is the yen, the dollar yen. Let's say that I had a level here, okay? Off these touches here and there and there. And then I said, actually, let's do this. Let's say that it's now that I'm looking for a dead zone, it's kind of hard to find one. Let's say that I had one. These are too good. The problem with this chart is the zones are too good. I did have one, I think it was on the Aussie dollar, or the Aussie yen years ago, and I'll show you what I did. For some reason, this pair does get them occasionally. I was hoping that the yen would as well, but yeah, here's an example on the Aussie yen. So let's say that I had, this level drawn right here. Okay? Whoops. To answer your question, Stanislav, let's say that I had one drawn right here off this high and then these highs right here. And then later, this is what happened. The market starts doing this. And I kind of overlook it and go, okay, well, maybe that's okay. It just sort of had a false breakout and then it fell back down. But then, later on, it started doing this. And I said, well, I don't really know what's going on here. It looks a little bit weird. Actually, the line chart actually makes it look pretty good. The closing prices are good. I could just move it up slightly and it would be okay. And in fact, that's what I like to use the line chart for, because look at what happened over here. But let's say I didn't like the look of this. I didn't like how all these candles seem to be pushing on either side. They were below, then they were above. And so in that case, I might just adjust it like this or something like that and just say, well, that's where the market's really respecting as resistance. And that's the kind of thing I do, but I don't do it often. And the reason why I don't is because usually my closing prices here are directing traffic. And I can see that the closing prices are actually respecting this quite nicely. So it's not an issue. But generally speaking, if it does get tricky, I can do that. And I think on the daily chart here, it did something like that back here, where it just started getting, I had some zone drawn over here, and then it started hopping up and down, and I didn't like it. Actually, I think it was further back. It might have actually been 2010. But the point is it doesn't happen often, especially if you pay attention to your line chart. So I hope that helps. Jeremy says, I sometimes use the 955 settings when he uses stochastic. Cool. I haven't looked at those. To be honest, I haven't looked at stochastic in a long time. Do you follow minor time frame divergences for positional trades? I mean, to exit midway. Arvind, I will if I'm getting antsy, but usually I just let them go. The 100 MA can be a turning point. Aristides, yeah. That's I know a lot of people do use the 100, 200, 50. moving average. Steven says, if you have 3 or 4 obvious bends lined up on a line chart, but they're all support and none are resistance, would you still count that as a zone? I often notice these near the extremes. Yeah, I should qualify that, Steven, and I'm glad you brought it up. You're always going to have some spots on the chart where the market's made a new low or a new high. And that can be our zone. And that, the classic example is here on the, this is the old Euro Aussie Daily, where it had a low. By the way, this was, I think, big shadow, kangaroo tail. And then it came down here, and it finally broke out here when it closed below. Finally, to answer, I think, Theo's question, the market finally closed below here, and that signaled that it was going to go lower, and it did. Big shadow, kangaroo tail. So, yeah, you're always going to have one at the extreme high and extreme low. Always. In fact, we should have one down here, shouldn't we? We should have one down here. Yep. So that's going to happen. Yep. That's all right, Minaj. EA says, how do you keep up with the 4-hour charts? I don't really spend a lot of time keeping up with them. I just watch them when I can. What I like to do is I like to say, okay, if this pair gets up here, I'm going to do this. And so that's what I've been doing on the 4-hour chart. So, for example, well, that's not a good example. I say, okay, let's say I was watching the New Zealand yen, and I'm not really, but I would just say, okay, if the market gets down here to 77.60 or even better down here, I would, I'd set an alert, and I can set an alert where it sends an email on my phone if it hits either of these lines. So that's really cool. But generally speaking, that's the kind of thing I do. I just say, well, I've been watching the Aussie for the last 2 days, waiting for it to do something bearish. And that's what I'll do, generally. Would you consider selling the 50% retracement of the current move on the Aussie? Counting from the high to the current bearish low? Oh, on the bearish candle on the Aussie. Yeah, I would consider that. Yeah, so in other words, if it retraces, right? Yeah, I would, because what you've got are these highs over here. Yeah, I would definitely look at that. Yeah. Which time frames do you use for naked trading? Just 4-hour and daily? Those are my favorite, and I also like the weekly, Arvind. Yep. I find the support resistance zones drawn in daily or 4 hours are usually respected more compared to the lower time frames, such as the 15-minute chart, says Jeremy. So my question is, if one wanted to trade the 15-minute chart and trade them naked, how would you do that? That, Jeremy, is going to be another webinar. Yeah, the trick, and I'll just give you a hint, the trick is you can't hang your hat on one candle. All right? Hopefully that helps, Jeremy, but we will look at that. We will look at that. In other words, you've got to look at more. There's a bigger picture with the lower time frames. Al, I don't know if it's Al or AI, but Al says, how do you refine your levels? Is it as and when new ones come up, or say once a week? Oh no, only I don't. Just Al. Okay, Al. I don't really refine them unless like the market's totally not respecting a level. Then I have to say, well, maybe I've drawn something wrong here. They should really hold up, like a fine wine. They should really hold up. Are weeklies tradable? Aren't the stops too wide? Well, it depends on your broker. If your broker allows you, like, here's the thing, and we were talking about this at the FX Street webinar tonight. Here's the thing. If your account's small and your broker doesn't allow you to define your precise risk. In other words, your broker says you can take 1 lot or you can take 2 lots, but you can't take 1.87 lots. If your broker's doing that, then I would suggest finding a broker like Awanda that will allow you to take 1.87 lots, because over the long run you're going to make more money. But besides that point, it is possible to trade the weekly charts. We've got plenty of nice looking setups on the weekly chart. Let's see a few of the well, we were waiting for a sell up here off this big bearish candle, and we never got it. The market never went lower. So there's one that didn't do anything for us. Boo-hoo. We're waiting for the Kiwi to sort of fall below. It's either going to break out and burst and go higher, or it's going to fall below this trend line and trigger a nice sell and then come down to our targets. But the classic that a lot of people, the pound CAD, had a stop loss. It was a bearish big shadow up here. This is a bearish big shadow weekly. Stop loss was here. The trigger was right here at 57.90. It came down, hit target 1. So we moved the stop loss to break even because it hit target 1 down here at 55.93, and then it hit target 2 at 55.15. So there's another weekly one. And the pound also printed a nice bearish candle here. The stop was at 63.10, selling at 61.45, targeting 59.70 and then 5900. And then of course it's just blown through all of those targets since then. So certainly it is possible to trade the weekly charts. I guess if your account's smaller, it's critical that you have precise control over your lot sizes. If you don't have precise control of your lot sizes, then you end up making decisions like, am I going to risk 1% on this trade or 3%? You know, and that can be really tricky. So having that precise control is really the way to go, in my opinion. Hey, VK says, do you have any preference for drawing zones on the closing price or the highs and lows? My preference would be the closing price. And it's taken me a long time to get there, VK. But I used to go on the wicks, but now I find the closing price is really the most important price to me. Yeah. And so that's why the line chart is so easy to use to draw these zones in. Manoj says, is it important to have your charts close at New York close? Mine close at London midnight. Reason I ask is my candles are slightly different. Yeah, yours are going to be, I think, 2 hours later. So it's slightly different. Most traders, Manoj, either follow your charts or my charts. And that's why Awanda's charts are so funky, because nobody follows those charts. So most traders are going to have a midnight GMT, or they're going to have a 5 p.m. New York. And very few traders are looking at anything other than those two. So if you pick one of those, you're usually in good, you're going to be in a good spot. All right, guys. Yeah, the 4 hour closed on the Aussie, and it's really good. Cool. Just closed. Brilliant. I'm so happy that this trade finally did something nice. Now, it still may retrace here. So some people that are interested may still be able to get in on a wick or something. But I really like the look of this. It looks so great. I really can't wait for it to get down here. I hope it falls like 500 pips next week. That would be awesome. Yeah, I know. I told them that, Aristides. I told them that. Yeah. Can you show the weekly chart again, says Joe? Okay. We'll show the weekly chart now, be it. Martin just said this, guys. For a contrarian point of view, Martin's looking at this. He's looking at a possible bounce here on the Aussie. So keep that in mind. You could get that here. The only thing I would say about that is, boy, that candle looks pretty bearish. If there was any sort of wick showing on the last two candles, I would maybe, go along with that. But to me, this looks really bearish. Now, obviously, it may get hung up here and may not go through for a day or two, but I can see where Martin's looking at that for sure. Here's the here's the here's that position thing that we were talking about. Hope to see you on Friday if you guys are interested in going to Roberto's trading room next week. All next week he's opening up for free. So I just sent you that link. And I'll go to the weekly chart now, and that'll be it, folks. I'm gonna go to sleep. So here's our weekly. We got a touch here, a touch here, and a touch here. We had a really, really nice bearish candle here. The market fell through this trend line here. And now there was a kangaroo tail here, and it did go lower, but then it came back up and went above. So if you did get in the kangaroo tail, you get stopped out, but then you have this big bearish candle, which is a really nice sign that, especially with the wick here, that it's engulfed this prior candle. It looks really good, and it did trade lower right here on this candle. It did trade lower the next week, and then it started going off to the races. So that was the weekly pound trade. And obviously the yen also. I know a lot of people talk about the yen. The yen was just a brilliant winner. It doesn't even look that good, but it did back here. The yen gave us a kangaroo tail right here with lots of space. And then, of course, it just went up like 7,000 pips after that. But you had to sit through two weeks of really weird price action before it went up, 1,500 pips. But for me, my last target was actually right here where these highs were. Right here and right here. So I didn't get any of this. But those of you who did, and I know there are a few of you out there, are loving life. Thanks, guys. I'm glad you enjoyed it, Stanislav. Thanks a lot. You too, Mike. See you, Yoshi. Bye, Dominic. See you, Robert. See you, Aristides. Thanks, guys. Have a good one, Richard. Take care, Ted. I'm glad you like it, Dennis. Bye, Susan. Take care, everybody. See you soon. Bye, Frederick. Bye. See you, Al. Bye, Manoj.